Welcome to Milestone Builders Show. You're moving to Las Vegas. My name is RealtorMehrooz. In the last decade, our company helped so many people just like you get the key to their dream home. Today we're here to give the key to another first-time home buyer. I'm very excited for them. Happy New Year!
Happy New Year to you!
Persian New Year!
Yay!
It's loaded with all kinds of great information. So as you guys know, on FHA, always the minimum down payment required by FHA is 3.5%. Sorry. We make this podcast for anyone at any level, whether you're a savvy investor and you want to just get some today's updated information because things change. Welcome to Milestone Builders Show. Welcome to our show.
Hi. Welcome.
Thanks a lot.
All right, so we've got a couple different types of income that are on the taxes. You're going to have.
It's loaded with all kinds of great information. Sorry. Okay, let's just start again. All right, done.
You ready?
Yeah, I'm not going to move. Hi everyone, today we're here to shoot the third episode of Milestone Builders Show. In this episode, we're going to talk about anything you want to know or you need to know about title. All right, without further ado, we're going to jump right into it. First, we're going to make sure you guys know who are our guests today, and then I'm going to start bombarding them with all our questions. How about that? Dalene, please.
Hi, I'm Dalene Mclaughlin with WFG National Title. I've been in the title industry for 22 years. My job is, and what I do, is I like to make sure that the deal is actually protected if it's insurable. If the deal cannot be insurable, then we go through the entire file, figure out what the solution is, get into it, and then we'll insure it. There are some that sometimes they're probate, quiet titles. What else do we see, Norma? Mechanics liens, things like that we do have to usually refer back to an attorney, probate attorney, things like that.
Uninsured deeds.
Uninsured deeds.
As you guys can see, we got a lot to talk about. I don't think we're gonna fill everything in one episode, but we try our best. If not, you guys hopefully gonna come one more time or many more time, be our guests, and we talk about all this. Matter of fact, you guys can actually go to our, if it's on YouTube, you're watching it, or in all the 5 platforms that are posted for our podcast version, the voiceover version. Just ask your question in the discussion section of our podcast. We're going to answer it in the future podcast. But without further ado, let's go to...
I'm Norma Green with Direct Signings, Direct Deeds. We are a nationwide signing company, so we work with the majority of title companies. And then I have Direct Deeds. Direct Deeds will assist you with accommodation deeds. Say you bought a property and your spouse was not on the deed because maybe they weren't on the loan. Then you would give me a call and I can add them onto title. So that's what I do.
That's one of the few simplest examples. They get more complicated,
yes,
and we want to hear all those
and
stories.
then you're going to ask me a question and say, Dalene, does that void the title policy? And I'm going to say, did your client purchase the extended binder? Because we can make changes on the extended binder if they're adding somebody to title or putting into a trust. Anything other than that, if they're taking somebody off, county does not approve it, correct?
I would not, I'm just going to say this.
No, say it.
If you get the extended policy, it is only if you're going to put it
In a
into
trust.
You cannot add, you cannot make any changes to the title except putting it into a trust. That's the only way it'll be protected.
Mm-hmm.
I think at this point we need to backtrack a little bit kind of start from the
Ooh, I like
point
it.
from the point where the actual transaction is start. I want to kind of go from Title 101.
Okay.
What is prelim? What does that stand for? And then all the way to how to get title. How many different ways we can get title. And then towards the end, now you got title and you bought the property, let's say under your name, and now you want to change it to a trust name afterwards and all that. And then talk about title insurance. What is it and why is it so good to have?
Okay.
And I'm sure it's not mandatory, but it's always suggested to have, right?
It actually is mandatory if it's going to be a loan on it.
Yeah,
Yeah.
of course.
Has to
Yeah,
be
yeah, of course.
insurable.
Yeah.
Yeah.
But if it's buying cash, then it's up to you if you want to get that title.
Why would you
insured.
not want to be protected?
That's what I'm saying. But legally, it's not mandatory, but it's suggested or recommended, right?
So I do a lot of promissory notes where someone, say the house is paid for, they're transferring it to someone, they're selling it. I don't get involved with the money, but they're going to sell it to someone. They don't want to pay for a realtor. They don't want to pay for title. I still ask them to go through title because I want them to have a clear title. I don't want them to come back to me and go, you didn't tell me there was liens on that property.
Because if they do buy in cash, they're saying I'll buy it subject to.
Yeah.
Yes. So let's go back and we're going to talk about all different kind of liens. We throw some words like mechanic liens. People think like if they go to mechanic and they don't pay and they get a lien.
It's not about it.
We know what's going on, but we don't want to make sure our audience know what
let's start
exactly
from
that
the
means.
time
Right?
that a transaction
Yes.
walks into our office.
Prelim.
As soon as the transaction comes in, it goes right off to the title department. A prelim gets ordered. What is a prelim? It is a birth certificate from the time that the property was actually land, constructed, easements, power easements, air easements. There's so many things that could happen. So that's what a prelim is. If somebody does take out a mortgage, there's a previous mortgage on it, we're going to see the deed of trust. We're going to see the property taxes. We're going to see judgments, if there are judgments, IRS liens, unemployment tax, and what's the other one? Child support.
Child support. Yeah.
Child support. And the government doesn't play with those three. No matter what, we're not negotiating. We're not going to try and negotiate the payment. We're going to pay it, or we're not going to close escrow. It's an uninsurable deal.
Yes.
Once we clear the prelim, and let's say that there's water, sewer, deed of trust, we'll order all of those payoffs. If it's clouded, that opens up another whole can of worms.
Clouded means if it's getting ugly.
Yes. Meaning IRS lien, unemployment taxes, property taxes that are really, really old, HOA. I have one right now that I've got $139,000 in HOA dues.
Oh my God. For how long they didn't pay their HOA?
20 years.
Oh wow.
And then we've got SITs for another $200,000. Well, the value of the property is $180,000. They've got $300,000 in past due bills.
Oh wow.
So what do?
I'm surprised so far that HOA didn't even foreclose on that property.
They haven't yet.
That's what I was thinking.
Yeah,
But
right?
they can't because the property taxes are higher. Property taxes are going to always
well,
hold
of
first
course, yeah.
position.
Matter of fact, let's talk about that because I know that throughout that previous crash, many people actually start buying properties out of HOA auctions because they actually got to the point where, okay, you're not paying us, we're going to foreclose on your property. It goes to auction. People bought properties, they're cheap, like $30,000.
They bought what the HOA dues
Yeah,
were.
exactly.
Yeah.
And then
But the problem is, which a lot of people haven't said anything, is that they acted as if they wiped out the first mortgage. The first mortgage company is coming back now, and they're wiping the HOAs out. They're actually taking those properties back. I've had a couple of them that they've took the properties back. So because they had to go in front of a judge and have the judge say, yes, you can go ahead and do a foreclosure. What they did was a quiet title, is what they did. So those owners of those HOA, they can't take it to a title company because we can't issue a clear title. There is still a deed of trust on it from the original mortgage company from 15 years ago.
makes sense.
That did not go away.
Perfect.
And they couldn't bring it to me because there was a loan. If there's a loan, we're not going to take your name off.
Perfect. That totally makes sense. If you guys have any question, make sure you ask it on the description part, and then hopefully we can clear it out in the future episode. So we kind of explained the prelim or preliminary title, And then now we're in the queue. Like, let's say I'm a realtor and we came to WFG and we're doing our deal. And now my client is asking me, hey, me and my girl, we're not really married, but we live together. We're planning to get married soon, but currently we're not. So how should we get title? First thing I say is, I'm not a attorney. I don't know. Ask your attorney, because I'm just doing the deal as a real estate agent. But when it comes to title side, they most likely
This is the thing, it's the vesting. And the lenders don't ask them their vesting, and the real estate agent doesn't ask the vesting. When we actually get to closing, there's a document that says, how would you like to hold title? So we should actually probably know that in the beginning. Because let's just say it's a husband and a wife, but then when we get to title, only the husband's taking title. We know we've got to do a spousal deed. We've got to have the wife deed off. She may not know that until we get to actual closing. Then she's surprised. Like, what do you mean I'm deeding off the property and I'm deeding off the mortgage?
Yes,
Right?
definitely.
But maybe she's not the income earner, so they couldn't bring her in. So it's the actual vesting itself. And I'm going to let Norma go through the vesting because there's different ones. Tenants in common, joint vesting, widow, married man, an unmarried man, a married man is sole and separate property. There's so many that matter, but sometimes title sometimes doesn't ask. If it's cash, you could actually buy a property married and pay cash, and we're just going to say a married woman sole and separate may not even ask for a spousal deed. And I just did one of those. What a blessing. We were able to go back through it. It was a cash purchase. Husband was killed.
Oh, wow.
He was killed. He was never deeded onto title, but Nevada's a community property state. So they possibly weren't going to let her sell the property and issue a title policy. After going back 20 years, we did a background check. I think we did a credit report check. We did everything. We said, okay, we'll go ahead and pass on this. Verified the marriage certificate, child support or child's birth certificates, the age of the children, if they were married, all of those things in order for us to be able to insure it. So vesting is so important.
It really is. So a lot of people don't know, but if you're buying a home and you're single, more than likely your significant other, girlfriend, boyfriend, whatever, if they're not on the loan documents, they're not going to be added on. If you want to add them on, they'll send them to me. They get charged transfer tax. So you paid $400,000 for a house, $200,000 was your transfer tax. You're going to pay transfer tax to add them on.
Oh, okay.
If you're married, you don't pay transfer tax. If you have a different last name, you just show us a certified marriage certificate and we can go ahead and get it added on. But a lot of people don't realize that. The other way you can do it is if your boyfriend, girlfriend, or whatever, if you can file for a domestic partnership with the state of Nevada. If you have a certificate from the state of Nevada, you also don't pay transfer tax.
That's after the property
is in your name.
And
Correct.
You want to add this other person in.
Correct.
Let's make sure we're clear on that. So, transfer tax. I know everything in real estate at least is negotiable, but who usually pay transfer tax?
Well, if someone's coming to me to add, say, their girlfriend, obviously the grantor is paying.
Yes.
If you're selling the property, I would think the majority of the seller
Typical
is.
what I see on
Typical.
a settlement statement is it's a seller fee. It's $5.10.
Yeah.
Well, up until the last 2 years,
We're
that
seeing
because
it split.
yeah, or it was so strong of a seller market that they want everything to be paid with buyer. Like the whole title fee, transfer tax, everything, even the HOA ordering
Transfer the HOA transfer fee. There's
yeah,
even an HOA
we've
transfer
seen so
fee.
many of them. If not, you couldn't even win the battle because it was like 20, 30 offers on the table.
But you're right, it's typically a seller fee, but we've been seeing it both. We've been seeing it split. We've been seeing buyer. I think now that the market is correcting itself, that's the word I want to use.
Yes.
Because we are back in a normal market. If we pull
Yes.
our numbers from 2019, we're right at 10 to 12,000. This is
Yes.
exactly where we were at. I think we'll start seeing that sellers will be back to saying it is a seller fee. Just like the title policy is a seller fee.
Yes. No, we always fought for our buyers and we try to be as fair as we can get. But hey, if there's a time that the realtor is telling me, hey, look, I got 20 offers. Out of the 20, your offer and this one other offer are the top best offers. But since I had a deal with you before and I'd rather go with you and I know your lender, whatever the case is, they want to go with us, they kind of give us a hint like, hey, look, if I put your offer next to the other offer, if I don't,
transfer fee.
and then at the end of the day, it's all about how much the seller going to net, right?
Yeah.
If the seller feel like, okay, on this deal I make more money, then they're gonna go with that deal, even if it's a couple thousand. Money's money, right? So how many different ways people actually can take title?
The two main ones is joint tenants. Obviously, whoever's on title, they have the same responsibility. You want to sell, both have to sign. You want to refi, you both have to sign. No one can do anything without the other. Tenants in common say, I only want to give her 10%. I'm going to keep 90. Okay, that person that owns the 10% passes away. Guess what you get to do for that 10%? You get to go to probate.
Oh yeah. The best way to avoid probate is
joint tenancy.
or former trust, right?
Or trust. Trust is great if you have kids and you don't want to add them onto title, but you want them to have the benefit of having the home after something passes, someone passes away. Also, trust. If you want to go in and out of a trust, you don't pay transfer tax.
Oh, that's
There's
another,
the gray loophole.
yeah, right?
LLC, for instance, you go from your name to an LLC, you're 100% owner of the property, 100% owner of the LLC, you don't pay transfer tax.
Oh, that's awesome.
Guess what? Interest rates went down. I'm going to refinance. Your lender's going to say, yeah, you got to take it out of the LLC.
Oh yeah.
Guess what you
It just happened to me.
Guess what you get to do?
Yeah.
You get to pay transfer tax.
Oh yeah.
But if you go from your trust to your LLC, or your LLC to your trust, and then the trust to your personal name, you don't pay
Tax
transfer.
exempt.
There's ways around it.
Of course.
You just have to know.
We just need to ask the pros.
She knows. I've been doing this 22 years and I still have to call her and go, Norma,
She'll call me all the time.
randomly up Norma, and then she'll know the answer. But with the joint tenants, one thing I do want to say with joint tenants is if one of them passes away,
Yes.
it does protect the other person, because then what happens at title is we do an affidavit terminating joint tenancy, putting just the one person in title so that they can sell it. That does keep them protected. If it's tenants in common and one have passed away, you're going to probate.
You're going to probate.
That's crazy.
And I've seen situations where it's a husband and wife. You see that their last names are the same. They say husband and wife, but they don't have joint tenants at the end. And guess what? They get to go to probate.
Oh wow.
So when you go to a signing, I want you to start paying attention to the vesting on the grant bargain and sell deed or the deed of trust.
Yeah.
Make sure it's joint tenant.
Or make sure there's a vesting,
Yes.
Yeah.
because
they
it's
just
not
have their name,
required to
that's it.
record.
Makes
But when
sense.
there's no vesting, let's just say that I took title, no vesting at all. My stuff's going to probate no matter what.
Yeah, and probate is two
Ugly.
things: time and money.
Yeah.
A lot of waste of time, a lot of money to be wasted. Then obviously, the heirs is not getting the whole thing because
I'll give you a couple of scenarios. This one just came across a month ago. He was a broker, and I'm not going to say names.
No.
Owned a property. Him and the girlfriend owned the property. Him and the girlfriend decided they would sell that property. It was their primary residence. It was in a subdivision. They decided they would rent it first. They weren't going to sell it. They're going to rent it. They're going to go buy another property. Come to find out, the homeowners association said, listen, everybody that lives here has to be primary owners. You don't get to rent. So he's like, okay. I don't know who he went through, but he went, had his renter added to title.
oh my god.
So him and the renter are joint tenants on title for 3 months. HOA said, sorry, you don't get to do that either. We're not dumb. We know that's your renter. Get your renter off. He says, fine, okay, fine. I'm just going to sell the property. He's going to sell it. Moves her out, has her deed off the property. He's back into title. He's going to sell the property. We run a chain of title. She has a judgment from the Department of Unemployment. She was on title for 3 months. Guess who's paying it? Him. It's not going away. So just for him trying to cheat the system, he had to pay off her judgment.
Yeah.
Because it's not going away. And the other ones that we see a lot, and this is where Norma and myself go out and educate the community, are veterans. It's typically one of the partners or spouses that work and are out of the country, and the other is usually home and taking care of the kids. But nobody ever says anything like, hey, by the way, you're not on title.
Mm.
He or she gets killed in the line of duty. What's happening to the house and the kids?
Yeah.
Scary, right?
Yeah, very scary.
Very scary.
Yeah, the more you think about
So
all
why
this
is somebody not sitting down
probabilities.
with our veterans and saying, hey, by the way, we love that you've bought a house. Let's just make sure you're protected. How is the title being held? Because again, typically it's whoever is employed, then they're out of the country. And again, we're in a situation out for probate. And those are the people we should be taking care of.
So as licensed realtors, we go through CE class, continuing education classes every 2 years. We need to complete 36 hours and all that. And one of our continuing education classes, it was very fun and educational. Like, not that the rest of them weren't educational. This one was so important for me personally to know. Like, the instructor said, you know what, every time people ask you, what do you do for your commission? Just have them Google what Realtor does throughout the process of transaction. There is a form in Google that is not put together with us realtors. It's actually put with some survey company. Literally, it breaks down 183 things that Realtor does throughout the whole process, from the point the buyer meet with the Realtor until the transaction closes. I throw that in because same thing, it's not only the Realtor that is involved. There's whole crew of professional companies that they need to come together, from mortgage company to real estate company to title company and escrow and all that, to make sure that transaction actually closes without any cloud on title. I want to bring up another point where we talked about it a little earlier. We want to kind of like dive in more in depth on it and see the reason behind, because I get that resistance many times from buyers that they're like, why should I pay for this? Or why it's so important? I mean, we already did the research and this property is good. Let's say if it's my cousin or it's my cousin's neighbor, I know them, whatever. So title insurance. What is title insurance and why it's so important to have?
Oh, geez. Title insurance is exactly what it is. We're insuring the title of the property. If anything comes up from construction, the builder, the original builder, let's say that they didn't pay for the block wall, the easements.
The mechanic lien.
Mechanics liens.
That's what it is.
So we're going to do a chain of title. If that's on there, we've already issued a title policy. We're going to go ahead and clear it. If it was missed, then they're going to file a claim against us, and we're going to go ahead and pay that. Title insurance is exactly what it is. We insure the title of the property. We do a date down all the way till 72 hours before reporting. We know everything that has happened. There are times we went to date down, getting ready to record, and all of a sudden a child support lien will pop up. An HOA lien will pop up. Because again, it's in that certain time frame. So they'll always say, well, what's your time frame on the chain of title? If you look when it was ordered versus when the information was supplied, you're always going to be 2-week difference.
Mm-hmm.
Then when it goes down for actual recording, you'll hear the escrow officer say it's on date down, meaning they're dating it down. They're checking it all the way to the minute if anything's been recorded on that property before it gets recorded.
Makes sense. So let's say, just as an example, someone closed the deal, hopefully got the title insurance, and during the process of buying this property, a lien just got recorded against that property, right? But let's say by the time it was getting recorded with the recorder office, it wasn't pulling up and title.
Cross-referenced.
Right?
It's happened.
So now we close, it looked like everything is just fine. There's no cloud on title, and it's a free and clear title deeded to the new owner or buyer. 2 weeks later, they get a letter that,
Canceling.
hey, how's that going to be handled?
So the customer's going to call the realtor immediately and say, Mehrooz, why am I showing that I got a recorded mechanics lien against my property for $30,000 for flooring I didn't put in?
Yes.
You're going to say, no problem. I referred it to WFG Title. I'm going to go ahead and call them. We're going to get with their claims department. We're going to file a claim. We'll get this taken care of. Then we'll get them on a group email. It's usually Tony in California. And that's what they do. They file a claim, and it's our job to clear it, not theirs. they purchase the title policy.
Thank you for the
It's easy. It's simple.
right to the point explanation. Hopefully that's clear everything. The doubt about whether we should get the title insurance or not, or why it's so important, because anything can happen at any given time, and you just can't predict anything.
And can I talk about the binder also? What
Please,
the difference is
please,
on the binder?
please.
So it is obviously if you're going to add your property into a trust, but there's another reason. You'll see investors always get a binder all the time because the price has changed so much. It helps the investors where they save money. Let's say they bought a property for $230, they're going to sell their property for $330. So they paid 10% difference on their binder. So when they sell the property because they didn't keep it, it's good for 5 years. They're only going to pay for the title policy on the $100,000 difference, not on the $330 all over again. Does that make sense?
Does it come with like a certain time limit from the day you
5
purchase?
years.
5 years. So
5
from
years.
the day you purchase the property until you resell that property,
Correct.
you got 5 years to utilize that binder.
And you have to take it back to the original title company that you insured it. The good news is with Fidelity Tycor lawyers in Chicago, they're all underwritten by F&F. So to my knowledge, I would have to check this, but you could take it back to any of those companies. If it was First American, same. WFG, same. It's whoever underwrites it, you do have to take it back to the original.
That's awesome. I had another question. Is there any major difference between title companies? Because there are choices out there. And here's another thing. I want to make sure that it's out there and we really talk about it in depth right now in this, because this has been in the back of my head for a long time. During these past 2 years, some realtors used to put title to be on the listing, on an original listing of a property. Title to be for so-and-so company, or seller preferred title with this company. But generally speaking, isn't it buyer's choice?
It typically is. If there's a client that says seller prefers, and this is what I will say and what I see, typically it's an investor and we already have all their LLC docs, their tax stuff, things like that. So that would be why the agent would say that they prefer. But at the end of the day, it's the buyer that chooses. It's the buyer's choice.
Definitely. Let's talk about trust a little bit more.
Okay.
Earlier you mentioned it's mainly for people that do have kids or anyone that consider the heirs, right?
Anybody that wants their family or whoever they're going to be, their beneficiary is, not to go through probate.
And Norma, will you go through who the trustee is, successor trustee and beneficiary?
Yes. So the trustee is normally the grantor on who's on title. The successor trustee is who's next in line. Something happens to you, who's going to take over? Then you have an alternative trustee, just in case something happened to the trustee, successor trustee. Now you've got the alternative. I just think that's the best way to protect everybody is to have a trust. Because here's the thing. If you transfer the property into the trust, the title company will just ask for copies of the trust. There's usually no affidavits for an uninsured deed. You can correct me on that.
No, correct.
There's no complications normally. If you do an uninsured deed and you go from one person to say your brother, you pay the transfer tax, now it's your brother, you don't have a loan, now your brother wants to sell the property. Guess what? Depending on the title company, you're probably going to have the original grantor sign an affidavit saying, yes, I transferred it to my brother on this day.
It's called a deed affidavit. And sometimes we'll even go a step further and we'll ask for a notary acknowledgement.
Yeah.
So if it's like 5 years old, we may go back to that original notary and say, if we can't get the affidavit, deed of affidavit, go back to the notary and ask for an acknowledgement to verify that it was. Because remember, it's an uninsured deed.
Yes. So if you guys probably question about what is probate, let's say if your first time you even heard that word, or you heard it but you're not sure exactly what it is, we're gonna talk about it a little bit further. But we just had a client appreciation event not even a month ago for all my previous clients. We invited the actual trust attorney and also a financial advisor to talk about many different things. One of them was trust, what is probate, why it's so important to have a trust and all that. You can go back to our YouTube channel and watch that video. Thanks God we made a video out of that, so it's available to everyone else that couldn't make it to our event. But for the sake of today's topic, probate. Let's talk about a little bit more in depth about probate and explain, because we have a lot of people. Here's the melting pot. We have people coming from all over the world, and for some of our audience, it might be the first time even heard that word because they never had that happening to their life yet.
Yucky. You just had one
Yeah.
that you had to refer over.
If I get a case where someone calls and my spouse had the property, and then I look and their name's not on it, there's nothing I can do. Because they'll call up, my husband just passed away. I need to have my name on title. I look at the property, their name's not on there. Guess what? I get to refer you out. Because I can't do anything if it has to do with probate. And everybody seems to think that they can call me and I can just take care of everything, and I can't.
And what she means that is, wife just called, says, hey, my husband passed away. Wife has no clue. She pulls the vesting, and he's a married man and sole and separate property.
Okay.
Here's this wife that has no idea that she was never deeded onto the property, and now you're going to tell this woman she's got to go see an attorney to keep our house.
Yes, and then it goes through the
And then it goes through probate.
attorney, and it's a lengthy process of, pretty much to simplify that right to the point and quick. Whatever estate you're living in, the state would actually take over the property, because the owner of the property, or whoever is the deceased or person that passed away, might have liability, might have loan on that property, might have credit card payment, might have a loan, car payment, whatever that he or she owes to whatever company, right?
Yep.
So the estate would take over the property and let everyone know based on the credit history that they owe money to, that hey, this day we're gonna have a hearing. If you want your money still, you can show up and defend yourself, right, in the probate court. And then
Have you sat in on one?
I sat in one only.
I am learning, and this is what scares me. You can sit in on a probate, and as the judge is hearing it, if there's other buyers there that offer more, even though the wife is sitting there, they can buy it from underneath her.
Yeah, and then
That scares me.
yeah, exactly. And then there are properties here and there coming to market. It says probate. Probate
To follow, which means it's in an open case. You're waiting for
Exactly.
them to.
So here we go. We just need to kind of like educate our buyer that hey, this can take maybe 3 to 4 months, because if they just started it takes that long.
Yeah.
And then if they already had the hearing and they know that this is the price they're gonna sell it to and all that, that's whole another thing. But we need to
And
just
if there's
submit.
12 kids
Yeah.
with 12 spouses,
Yes.
12 grandkids, that's
Exactly.
another whole thing, because you have to do all those notices.
Yes. So overall, probate can get nasty and
Expensive.
really expensive and time-consuming and nerve-wracking at the end. Try to avoid it as much as you can, right? Anything you guys want to add that I might forget? Because this topic is further we get and the more we talk, there's more deeper layer into it that, like, I just want to cover the basic and then we go and dedicate a whole episode to one specific topic. But anything you
So
guys know?
one thing that I encounter on a daily basis is I get a call, I want to do a quick claim.
They heard something.
Yeah.
He or she or uncle
So-
or neighbor said something. There's something called quick claim. You just go do it, but they don't know
Tell them the
what's.
difference what a quick
So-
claim and a grand bargain sale deed is.
And that's what I was going to say. And when they call me and they say, I want a quick claim, I will be happy to do what you need, but it's a grand bargain and sale deed. Quick claim does not promise anything.
Yep, doesn't
And
guarantee.
title company is going to scrutinize that way much more than a grand bargain and sale deed.
Mhm.
When you do a quick claim, like I said, you're not promising anything. You do a grand bargain and sale deed, you are promising that you do have the right to transfer that. Quick claim, There could be 10 deeds out there that you signed that you never recorded, and you don't have to acknowledge them. Grandfather and sale deed, you're saying there's nothing else out there. I
This is
haven't
it.
signed anything. This is it. I'm going to get it recorded.
Yeah.
Whoever you quit a grandfather and sale deed to, if you misrepresent yourself, you can go back to the grantor. Quitclaim, you have nothing to protect you.
Yes. So, as I said earlier, towards the end of the video, I was just trying to make a couple of announcements, right? I guess this is the time we're going to wrap this up. So I just studied to pass my broker license. I was a realtor so far, and now I step it up to become a broker. And this was one of the most important topic that I remember. It was just last month that quitclaim deed, no guarantee.
No guarantee. Like I said, I won't even prepare.
So usually it's between like close, like family. Like
Even then, grandfather and sale deed.
if the father want to quitclaim it to daughter or
Still a
Prepare
grandfather and sale deed.
Why
Yes.
put yourself in a position when you don't have to?
Exactly.
That's my thing is, let's make it so that they don't have any struggles down the road.
Definitely. You want to add anything to the?
I don't. This was really good. What I do want to share is that I am in the middle of writing a CE class on vesting.
Mhm.
I'm hoping to get it done by the
I'm
21st.
definitely gonna be there.
We've done a couple of topics, and our next topic, which we're going to be meeting with the county recorder's
Mhm.
office, is the LGBTQ plus community and how they're vesting.
Oh, nice.
And so
Because that's another
that's another
Totally
whole
different
topic.
topic, yeah.
I mean, so it's like it's about educating ourselves and why vesting is so important. At the
Yes.
end of the day, protect your asset.
Yeah.
That's what it is.
Yep. Pretty
Protect
much.
your asset.
Definitely.
The one thing I want to add also, if you add your child, they have to be 18 years or older. But if you add them on and they're single when you add them on, and then they get married the next day, their spouse now has rights to your home,
Community property state.
community property.
Yeah.
They get divorced and they never take that spouse off. That spouse gets married. That other spouse now has rights to your home.
Okay, because it's a chain.
So that's why if you can do a trust rather than adding your kids on, that's the best way to
Way
go.
more protected.
Right?
If you're in a
Overall-
trust, even if you go get married, you've already named your trustee.
Yeah.
You've already named your successor,
Everything is
your
there.
beneficiary.
Yeah.
Yeah.
Regardless, you're protected.
I think I would, if someone tried to ask me this question, how's the best way you can explain trust to me? I would say it's a will but more legal. Correct me if I'm wrong.
So
It's
what
technically the breakdown of what you want to happen after you're gone, kind of like a will, but the difference is it has more legal.
but the will, you're still going to go through probate.
Yeah, that's
It's
the
just
thing.
going to shorten probate,
Exactly.
but you're still going to go through
Of course, yeah.
probate. With a trust, you don't go through.
You don't even, you literally bypass that whole
Yeah.
probate.
Norma,
Hassle.
share your information about direct deeds before we wrap this up. Your
So-
contact info.
So you can contact me, even if you have clients that just want to check to see what they're vesting. Just give me a call. I will check. My number is 702-685-0400. Just give me a call. There's no charge for it.
Awesome. What was the company name?
Direct deeds.
Direct Deeds.
So remember, I have direct signings, direct deeds.
Direct Deeds. Awesome. Thank you very much for coming in. Seriously, it was
Thank you,
a precious
Mehrooz.
time of your life, and hopefully we extend it to future episode. We talk more in depth about that new topic. I really
I know
want.
we're really excited
Yeah.
about that.
Yeah.
Once you're done writing it, I think you're the author of that. We're gonna come
And
and
we're
talk
going to sit
about
with
it.
the recorder's office and make sure that we know the correct paperwork, the correct documentation, exactly how it's to be. We want to be on the forefront of that, of educating the community.
That's awesome. Thanks a lot.
Thank you very
Appreciate
much.
that.
Thank you
very
so
for
much.
coming by. I gotta let you guys know we're in the middle of moving our office, and the reason why we didn't have our third episode in the last probably 2 months that you guys been waiting for, like where is that other episode coming out? We just bought the building and we're renovating it, and it's gonna be 4 businesses under the same umbrella called Modern Choice. I'm very excited about it, and then down the road you're gonna hopefully see all the marketing about it. But technically we're gonna do real estate mortgage, insurance, and tax all under one roof for the benefit of all our future clients, and hopefully make it more simplified and right to the point, one place to take care of everything for them. Please go follow our social media. They're all under RealtorMehrooz. Milestone Builders Show, we have the whole playlist on our YouTube. Also, if you're going to podcast of your choice, if you want to use iTunes or Google Cast or Stitcher or Spotify, there's one more that I'm missing right now. We're there. We're in 5 different platforms. We're going to put it on a screen. You have any question that you wanted to be asked in the future episode, please reach out, DM us, email us. You can find us anywhere. So simple. Talk to you guys until next episode.